This is perhaps yet another catalyst for Chinese stocks to go higher.
No, clearly this is positive because this was a big overhang for these names, and thankfully this is behind us. And with Biden administration coming over, the policy predictability is going to be a lot better on the global stage. So I think that is positive for equity markets as a whole.
But how much higher? Valuations at 5-year highs. We have, I don't know, the CSI 300 index just, 7% short compared to the high levels of 2007. How much upside are you expecting?
Okay, so what we'll see in coming quarters is the change in leadership in the market, and that's already happening over the last 3 to 4 months, where we've seen cyclicals, which are more kind of a tune or a good proxy for economic upturn, outperforming these structural growth stories. These structural growth stories, which we've liked, the tech, the domestic consumption stories have done well for the last 3-4 years, but may take a breather for the next 12-18 months as kind of the earnings catches up with the valuations. In the meantime, with this growth acceleration, a lot of the cyclical names, whether it's financials, whether it's tech hardware, materials are under-owned, and industrials also, and they will do well. And what we believe is going into 2021, other EM markets, Korea, India, smaller markets like Vietnam, which have underperformed China for the last 2-3 years, will be the winners and will come out well, basically.
In terms of risk, Rahul, to your predictions, I mean, what are you making of inflation? Could markets be surprised by inflation coming higher and faster?
Clearly, the market is going to be positive, surprised by inflation coming higher and faster. And why I say it's positive, because look, what we often miss is inflation means higher nominal GDP growth, which means higher revenue growth for companies. And in a way, that's good because, again, it's a broad-based recovery for economies. So something which we watch very closely is 30-year inflation break-evens. These inflation break-evens at 2.07 today are similar to the level in July 18. So that's what's reflective of the recovery. And Fed is going to be behind the curve. So I think the only risk to the story, which I was kind of so optimistic was that Rahul, we have a big spike up in yields.
Rahul, how much is your view on emerging markets really contingent on this, a largely held idea that we're going to have dollar weakness?
I think, Rishad, what happens is, look, in life, we've got cycles, and we've had 4 or 5 years where money is concentrated in US techs. We've not seen any excesses in the EMs. And with this amount of printing, which is happening in the US, obviously, dollar flows outside, flows come to markets like India and other EMs. So that's positive for these markets. So that is one important factor, but I would say that's not the sole factor. That's also being helped by the fact that a lot of the EMs ex-China are under-owned. They've not done anything for the last 5-7 years. Unlike 2007-8, we've not seen huge capital spends in these economies. So that's where these economies are kind of at their economic trough, and which is where if they get a bit of a help from these capital flows, you can see reflexivity play out in economies and stock growth come back.
Rahul, very quickly on 2020 being the year of the active or the passive fund manager.
Okay, 2021. So 2021 is going to be the year for disciplined active managers. And why I use that word is, as the breadth in the market improves, it gives a lot more opportunity to disciplined managers to generate alpha. So I'm very hopeful for active management for this year, 21.